Your mic is off.
Yes, I'm aware. I'm aware. I was just waiting for others to join. Okay, it's 5 minutes past 5. We can get rolling. I trust that we are all doing fantastic this evening. I trust that our day is being an awesome one, a stress-free day. For those in Lagos, I hope Lagos has not been hectic for us. And also to our friends all over the world, I trust that our various regions have been a very peaceful and calm one. Okay, let's get started. Last time we were going to start order type. So last time we talked about currency, the pairs in the cryptocurrency market. We talked about the common pairs. We have the Bitcoin and Tether. We have the we have the stablecoin pair. We have the major cryptocurrency pair. We have crypto to crypto pair, and we talked about each and every one in details. And I believe we all still remember everything we said from the last class. Am I being heard? Somebody, Mr. Shaye, please kindly unmute. Am I being heard? Can you see my screen?
Yes, yes, yes. You are heard.
All right, sir. Okay, let's get going. Today, let's start with order type. So what we need to know is that there are different types of orders. I'll just take it from this slide here. It says trading order types are instructions given to a broker to buy or sell an asset. Trading order types are instructions given to a broker to buy or sell an asset. As we all know, a broker is the platform where we get all of our dealings done. We've talked about brokers in our previous classes. We have lots of them in the crypto space. We have the leading one, Binance. We have Bybit. We have Huobi. We have Huobi is now HTX. We have Tron. Tron is now Gram. They've rebranded. We have OKX. We have Kraken. We have BitGet, and so many others. There are even many that are not so popular to us in Africa here that are working in Western world. So we have lots of them. All right. So the three primary foundational types are market orders, limit orders, and stop orders. Now let's look at market orders. Market orders simply means execute immediately at the best available price. So when you're about to initiate a transaction on any platform and you're using market order, you're simply telling the algorithm set up by the platform to buy for you at the present price. The present price. So you initiate your order, it gets filled immediately. That's what market order is. And I'm going to be showing us live. I'm going to be showing us live so we can have a better understanding of these order types. And number two, we have limit orders. Limit order simply means execute only at a specific price or better price. Okay, you're simply saying, I don't want the algorithm to buy for me right away at this price. Let's say the price of an asset is at $100 and you think the market is going to go down, and then you don't just want to buy at $100. Maybe you want to wait until the price retraces back to $75. Based on your analysis, you believe that price is going to get there. Okay, so what you need to do is what you set limit order, and then it's going to stay there until the price gets to your limit order, and then your transaction gets initiated. And then we have the stop orders. This order triggers a trade when a specific price is reached. All right. This order triggers a trade when a specific price is reached. Okay. Now let's move further. Let's look at them even in greater detail. So market order is an instruction to buy or sell an asset immediately at the best available current price. The use case: best when you prioritize the speed of execution over the exact price. In this case now, you don't care about the price. You just care about the speed. Take, for instance, Solana is presently on $70, and based on your analysis, you feel Solana in the next 1 or 2 days is going to go to $200. Right now, you don't care about price. What you want to do is you just want to get in as fast as possible before you lose that $100 price mark. And I think this also sorry, 1 minute. Who is messaging on Telegram? Is anyone having any issue? Okay. Mr. Shep, please, from time to time, help me check Telegram group, should be in case anybody's trying to join and they're having issue, because, okay, I'm not sure of the relevance of it. 2021 events in 2026. Okay, especially for we newbies, it is important we share recent impacts. Okay, I will attend to this later, Mr. Eri, maybe Mr. or Miss or Mrs. I don't know, but I will attend to that later. All right, so let's move on. So I was going to say that market order is also what the people who FOMO into a very bullish momentum token. It's that it's also what they use. Okay, market order. You see a price going parabolic, and you don't want to miss out. Like the analysis we talked about when we were looking at the psychology of the market cycle. Okay, such people that enter at the close to the euphoria stage, close to the peak of the market, they don't consider price. They don't consider price at all. They just get in at the current price, which they believe is the best price, and they just want to continue to follow the momentum up. But for smart money investors, price is very important. Okay, because when you consider price, you consider profits. When you consider price, you do proper analysis to see the best spot for you to step in. You don't just step in anyhow. And I think that is true for any intelligent person. Before you get into a territory, you should make findings. You should get to know the territory. You should ask 1 or 2 questions. The same is true for soldiers. When you're going to war, you don't just step into territories anyhow. You survey so that you don't get ambushed by the enemy. Okay? And since we all know that this market space is like a war zone, so I think it's just very important that we survey, that we do analysis. Like I said in the last class, when I was answering Remix, Mr. Remix, when we most likely maybe next month, when we start to have our meetings on Value AI, I'm going to be taking us through some detailed analysis of some token, what to consider when analyzing them, why the past record matters, and why you need to factor it in when you're analyzing the market for the next cycle, because in cryptocurrency, history does repeat itself. History does repeat itself. Okay. So when we get to that area, we're going to look at that. All right, we have the pros. Okay, the pros: guaranteed execution. You are almost always guaranteed to get into or out of a trade like almost instantaneously. It is guaranteed that when you execute your trade on market orders, instantly your market is filled. Now let's look at the cons. Prone to slippage, meaning your fill price might differ slightly from the displayed price during volatile moments or with low liquidity asset. This simply means that in the heat of a bullish or okay, let me not even use bullish, because sometimes the bearish side too could have very crazy momentum. Okay, so when the momentum is high and there is a lot of FOMO and everybody's just trying to get in either to the bullish side or to the bearish side of a coin, as long as there's FOMO, as long as there's momentum, sometimes when you feel your price at say 0.0001, it might not get executed when the price hits when the price hits that level. We might not get filled at that 0.0001 that you intended to buy. It might vary a little bit. This is due to what slippage, or sometimes it is due to what volatility. Okay, because there's a rush. There's a rush before the algorithm could say, Jack, the price has moved past. But however, it's just a very minor difference, just a very minor difference. Okay, let's go to the next one. We have limit orders. Limit orders, I'm sure many of us here should be familiar with both market order and limit orders. For those who's been taking the trade that I've been posting in the group, you know it's limit orders that we use, right? Sometimes we use market order, and sometimes I send screenshots and I say, okay, wait for this market to go past this blue line, and when it goes past this blue line, you step in. So for such trade that I share like that, we don't enter at we don't enter at limit orders. We enter at market orders. However, it varies for everyone, since once the candle passes the blue line, each and everyone takes the trade at different prices, but very close to the blue line. Okay, but mostly we use limit orders. When you see that the price is up, you set your trade down and you give the algorithm instruction that, okay, when the price gets here, buy for me and sell for me at this region also. So you give it the parameters needed to execute that order. Although I know for many of you that pick the trade from the group, you use market orders, because sometimes the price that I set there for entry, the market could have even gone past that a little bit. But however, in the futures trading, limit order is very, very, very cogent. Okay, so let's look at buy limit. First of all, it says a limit order is an instruction to buy or sell at a specific price, or a better price, or a specific range. We can use those terminologies. So we have the buy limit. Buy limit simply means what? Placed below the current market price. Okay, you are buying. And you know, when you're buying, let's say for instance, the price is here. When you're buying, it simply means you're going long. Okay, let's say for instance, the price is here, and you believe the price is still going to retrace here. What you want to do is you want to set your buy order here. Okay, so when it touches this region, it goes back up, you're already in profit. Now let's move on. It says buy limits placed below the current market price. So that's what I was saying, that this is the current market price, but you believe the market is still going to nosedive a little bit down here and then before going up. So you're going to place it below the market price. Below the market price. It only executes 1 second. It only executes if the price drops to your limit or lower, allowing you to buy the dip. What this simply means is, if the market price were to be here, and this is the movement, okay, and you have set your what's it called, your buy limit here. If the market doesn't come down here to this region, your order will not be filled. It's just going to be there. Yes, that happens sometimes. The market might just get towards here, okay, just very close, and then reverses up. It's very possible. And sometimes it can come all the way down, all the way from here down here, fill your order, and then move back up. So both scenarios are very, very possible. So it only executes if the price drops to your limits or lower, allowing you to buy the dip, allowing you to buy the dip. All right, we have the sell limits. I'm going to explain these things. I'm going to show us on the live market very soon. We have the sell limit, okay, placed above the current market price. When you are selling, what you're simply doing is what sell is what we've been doing all along for the signals that I've been sharing. When we are selling, you're simply saying the market is what should buy down for you. You're going short, not long. You're going what? Short. Now, let's take, for instance, according to what we have here, it says placed above what? The current market price. It only executes if the price rises to your limit or higher, often used to what? To lock in profit. Now, take, for instance, the market price is here, okay? But you believe there is supposed to be a what? A quick retracement, okay? The overall trend is downtrend. Yes, we know. But presently the price is here. But you believe the market should what? To come, you believe it's supposed to come and retest the resistance level before further going down. Okay, you believe it should come and retest what? The resistance level, okay, before going down. Now, in this scenario, where you want to place your sell limit is here. That's where you want to place your what? Your sell limit. You want to place your sell limit here, so that upon the markets what coming back to retrace this at this level, then it gets filled, and then before coming down, and then you be in what? You lock in massive profit. Now, there's a difference between a market that is going down overall, okay, and the price is here, and the market is supposed to come and retrace here. There's a difference between the person that comes in from this level and the person that comes in from this level. The person that comes in from level A, when the market starts its retracements, it will be negative. This Mr. A is going to be negative. But the person, Mr. B, that waits for the retracement and gets and places his sell limit here before the market starts going down, okay, he is already in profit before Mr. A even gets into profit. Now, by the time the two of them will take profit here, of a truth, Mr. B is going to lock in more profit than Mr. A. Do we all understand this? Do we all understand this? If you understand this, you can give me a thumbs up.
Very clear, sir.
Awesome. Madam Mojupe, are you there? Do you understand this? Mr. Moses, do you understand this? Mr. Frank, who else do we have? Mr. Remix, good to have you again today. Mr. Festus, do you understand this?
Yes,
Mr. DJ, do you understand this?
I'm good at it.
Yes, sir.
Awesome. I saw somebody raise hand. Does the person have a question before we move on? Oh, it was just a mistake.
I was fine that I understood.
Oh, fantastic. Good to have you, sir. All right, so let's quickly look at, before we move on, let's quickly look at a live market right here. By the way, how many people took this trade today? Mav, how many people took this trade today? It was a very juicy one.
I saw it late, so I didn't take it.
Oh, sorry about me. That's Mr. Festus, right?
Yeah, I took only.
I didn't see myself.
Okay. One thing I think we can now mute ourselves for now. One thing I think we need to do is, I don't know if everybody gets notified when a message is being dropped in the Telegram group. I also myself sense that the Telegram group is quite, how do I put it now, silent. I don't know if we get notification because I post from time to time there, and I expect at least for people who see whatever I post to give a thumbs up just to signify that, oh, thank you for this information. I got it. I'm here. I can see it. But those activities not been happening. So it's worrisome so that it doesn't look like I'm talking to myself. Okay, so please, whenever we see the messages I communicate, please give a thumbs up or maybe just indicate that you can get this. And also, if you're not getting notification from Telegram, please try to look into it so that I can get notification so that you don't miss out on this important update. Okay, it's very, very important that we be active with our business. Go ahead, sir. You want to say something?
The easy way for people to get or be notified quick, what they will do is you go and customize your Telegram group. Like I always get alerts. There's a way you customize. It's easy.
Mr. Festus,
Hear me?
please repeat that. Your network is breaking.
Can you hear me?
Yes, we can hear you now.
So they can customize pop-up with even phone. It's easy for them. I customize mine today.
Hello, sir.
Go ahead, sir.
Yes. I want to suggest something with respect to us receiving your signals when it does come in. From the main group, we have different group in the main group. Okay. So if you
different platforms.
Yeah, the platform. Yeah, we'll have different arms in this segment. Yes. So, and we cannot customize, or I don't think we can customize each of them with notification, because they are all in one. So it has to be one. So if there is a message, it will pop up, which might not be necessarily be the signal. I'm thinking maybe even if it's a WhatsApp group or this Telegram group on its own, that would be for the signal, and when you post the result afterwards, let it be dedicated apart from this group, so that if you customize it, you can choose a distinct ringtone for it. So whenever you hear that ringtone, you know this is purely for priesthood signals. You can understand? Because if it's normal notification, there are several groups, and once a message comes in, you'll be hearing pam 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 with the same ringtone. Just a suggestion.
Okay. I'll look into that, sir.
Yes, sir. Thank you.
Yes, sir. All right. Okay, let's move on. What I'll just say to everything we said so far is I know we are new. Many of us were not familiar with Telegram. I know it's pretty much a new territory for us. I just believe if we take time to walk around very well, we'll get familiar. I just believe we should just take time to understand it very well, because it's way better than WhatsApp. It gives more options, and it makes everything organized. Look at the way we have different chat rooms under one platform, right? We have the one for value, we have the one for the class, we have the one for what's it called now, for features, and it is topics that are related to these chat rooms that are posted there, so that when we have subsequently, I believe if we are all seeing what I'm seeing in the next like 6 to 7 months, we'll be having a lot of people wherein when they come in, we can't start explaining everything one by one. I tell you, we can't. It will be overwhelming. It will be daunting. The best we will just do is we'll just refer them to pinned messages. Now, in WhatsApp, we only have one chat room. We can't just pin everything. It's going to be too clumsy. But when we are in Telegram, different rooms, different opportunity and ability to pin related topics to each chat rooms. I think that's just very beautiful, and it makes everything just wonderfully organized. So let's get more familiar. Let's walk around Telegram. If we're not getting notifications, let's try to get notification. What Mr. Eugene also suggested, I'll look into it, and I believe we'll be good. We'll be good. Okay, let's move on without wasting time. So this was a very juicy one. It didn't take time at all before it delivered, and 8% is a very fantastic one. Mr. Remix, are you Mr. Yowax, or it's two different people?
Yeah, that's Mr. Yowax.
Oh, okay. Mr. Yowax is also Mr. Remix. I was almost confused. Is Mr. Yowax still in our midst? Okay, let's answer your question. You had, let me see, are you here, Mr. Yowax or Mr. Remix? He's not here. Okay. He asked me a question in the private chat room. I was going to answer it, but it was time for our class already. So I couldn't answer it, but I would have loved to answer it here. But since he's not here, I'll just move on. Okay, so let's look at what we can quickly do here. I was trying to explain the buy signal and the sell signal. So I'll go to the lower time frame so that we can initiate a transaction quickly, and then we'll move on. My network, why are you lagging? Okay, awesome. Let me use another, let me see. Okay, I think I can use BRT. No, let's use CYS. Okay, look at this signal right here. Okay, this signal has touched the premium level. Now, let's talk about the buy, what's it called now? The buy order first. Okay, now, this market started from this region, but you and I know that it has touched the premium level, and there's meant to be a sort of retracement. As a matter of fact, I expect this market from here to come and touch this region here. This is the order block, the buy order block. Okay, I'm expecting it to come and touch it now. What I'll do is I'll set my signal. I'll set it to buy from here and then to sell for me somewhere around here. Now, this is what we were talking right here just now, okay? Limit orders, the buy limit order is placed below the current market price. It only executes if the price drops to your limit or lower. Now, I'm waiting for this price right now that is oscillating. I'm waiting for it to come and test my entry price. I'm waiting for it to come to this region, okay? Now, if it doesn't come down here, my order will not be filled. Okay, if it doesn't come down to this order block where my what's it called? What's the right language now? If it doesn't come to test my entry, yeah, then the order will not be filled. Okay, now let's watch it. Hopefully it gets filled. That's CYS. Now let's look at another one for the sell limit order. While this one is there, we'll look at the sell limit order. Okay, this is a very volatile market. Exit. Then let's look at the sell limit order. Okay, network, come on. All right, now let's look at these together. What we have right here, we cannot do proper analysis from 5 minutes. Let's look at 4 hours. Okay, so you can see that on 4 hours, this market has touched the premium level also. Okay, now we're talking about the sell limit order. This market has touched the premium zone. Now, this market is definitely supposed to retrace before coming back here. Now, to set a sell limit order, I would use bar replay so that we can. Is bar replay available? Oh, my bar replay is not available. Let me go to another time frame. No, start new. Okay, my bar replay is available now. Okay, good. Look at this. Network. Okay, good. Okay, fantastic. Look at what we have here. This was before the market touched the premium level. Now, I know the market is coming to retest here. Okay, this order block that was created where the rally started from. Now, after testing it, I know that the market is supposed to come back to the premium level. Now, what I need to do is either I wait or I set a sell limit order once the market gets there. Now, let me play this slowly for us so that we can see how it's going to play out. Now, good. This is where we are now. I didn't go too far. After touching this zone, this premium zone, what happened? The market started retracing. While I knew that the market was going to come to this region, I would have set a sell stop order there. Okay. Now I'll go back a little bit again. Then we'll see. Now look at my sell limit order right here. This is it. Where's it? Okay. This is my sell limit order. So I know that the market from here is supposed to come to this zone, right? So after having analyzed the market, I'll just place my sell limit order here. And once the market hits this place, it automatically fills itself. Now I'm going to play it again and then we'll watch. Now, did you see that? The market touched this zone right here. Okay. What's up? The market touched this zone right here. Okay. After touching it, look at what happened. The market came down by what? By 12%. By 12%. Okay. I set my sell limit order, and then after the market hits the premium, it came down. And then I'm out. Boom. Do we understand this? Do we understand this?
Yes, boss.
Let's check out the other one we set the previous time, 5 minutes. Okay, the market is still oscillating. It's yet to come to the order block to fill the order, but eventually it's going to come there. It's going to come there. But let's move on. We'll come back to check it, and then we'll see what becomes of it. All right, the pros and the cons for limit orders. It says the pros: complete price control. You will never pay more or sell for less than your chosen price. You will never pay more or sell for less than your chosen price. So the price at which you have set the order to be initiated is where it is going to be initiated. It is where it's going to be initiated. So for that reason, you aren't going to be paying more, and you aren't going to be paying less. You have a complete price control because you are not FOMOing in. You know what is going to happen, and then you have placed your buy limit or your sell limit at the appropriate place. You have that is just that's just the exact thing that's going to happen. You have a perfect control over the market. Okay, and the cons, it says if the market never reaches your designated price, the order will not execute and you will miss the trade. Okay, many a times I don't see these cons as a miss when it happens. When I set my blue line at the change of character, let me show us what I'm saying. I have some signals here that I've been watching out for. Let's see Mav. Okay, Mav is done already. Let's see this if I still have it there. Okay, I think I should have it. I should have one at on pump. I think I should have one on pump. If I don't have it, I'll check pump. Let me see this pump. So I saw a change of character, and I was hoping that the market will come and break below the change of character so that I can initiate my price, but it didn't happen. Okay, look at this right here. Currently, the trade is still running. The market went against me. So this happens sometimes in the market. After you have analyzed properly, the market just does its thing. That's why proper wallet management is what is very important. Right now, this market has gone against us for everyone who took the trade by 28%, but there's no cause for alarm. We are not free jetting. We are just waiting for the proper time when it will come back to fill our to get our position out. Now, one thing we need to know is this: everything in crypto that goes up is definitely coming down, and everything that goes down, that is down, is definitely meant to go up. It's a very good understanding of trading. Okay, once you know that a market is down, don't go and start buying down again. And once you know a market is up, don't go and start buying up again. Imagine, let me give us a quick example of what I'm saying. Imagine the market being at the discount level here, and for a reason unknown, maybe because the person is a newbie, okay, doesn't know what a discount or a premium or an equilibrium level is, then it decides to short the market from here. Let's say he wants to take maybe 10%. Can you imagine when the market is already at premium? If a market is at premium, it's down already, and what should happen is what? It should go up. A market at what? At the base, at the discount level, is meant to go up. Now, these are the things as traders we need to watch out for. When the market is at discount, you don't buy down, you buy up. And when the market is at the premium, this is not premium anyways. If a market is at a premium right here, you don't buy up again, you buy down. Okay, so when the market is at a premium and you buy down, even if it likes, let it go against you. It's just a matter of time. It will still come down because it was meant to come down in the first place. Okay, those are the guardrails you have on your side as a trader when you buy right. Okay, now, and if the market is at a discount and you buy up, even though the market likes, let it come down a little bit more before going up, just know that you are on the safe side. Okay, I just thought to chip that in quickly. All right, look at this. I stepped into pump at this region right here. Okay, this region right here. Okay, I saw a potential change of character, and then I didn't even set a limit order. I just stepped in, but the market has gone against me. However, there's no panic. There's no cause for alarm. You can see I'm not at the discount level. I'm at the what? Equilibrium level. Very soon, this market is still going to change character from here, and then it is going to come down, and then I'll be out. Okay, so it is important we note that. All right, so let's look at what we have next. So the cons. So I was saying that when, take for instance, this right here, there should be a change of character here very soon. Okay, now sometimes what I do is I mark it like this. For many people who's been taking my trade, you should always see this small blue line. This is how I do it. Okay, I'm marking it out that okay, at this very place, if the market comes what from here and closes below the blue line, then we already have a what? A change of character. What is a change of character? It simply means the market is switching from what? From the uptrend, okay, it is now switching to a downtrend. That is why I usually put this blue line here most of the time. I know many people don't know the reason, but you do know now, okay? That's the reason, because I'm hoping for a change of character.
No.
You have a question, sir?
No, I know. When I see your setup, I know.
Okay, awesome. That's because, Mr. Festus, you've been in the game for a while, right? You know this smart money concept. But for people who don't know smart money concept, they will just always see the blue line and they don't know the reason why it's there. It's always for what? A change of character. Although the smart money concept indicator is going to let you know once there is a change of character, but many times I don't wait for smart money concept indicator to tell me. I already know what I'm watching out for in the market. Okay, so when I put the blue line like that, I'm waiting for another candle to form like this. 1 second. Okay, I'm waiting for another candle, a red candle, to come and form and close below this blue line. Once it closes, what I'll wait for is maybe another one and then a retest. Okay, once there's a retest, once the candle comes like this from here and retest like this, this is my entry right here. This one right here is my entry. I'll just place my order right here and then boom. I'll kill the market from there. Okay? I'll kill the market from there. So now, sometimes I place this blue line there, waiting for the market to come and close below it. But it won't. When it doesn't, it's just a safeguard. It's just a safeguard for me, right? A guardrail for me that except the market closes below, I'm not going into this trade. And when the market does not close below, it just makes me understand that we are not yet done with what? With the bullish momentum. We're not yet done with the what? The uptrend. And that way, I'm on the safe side. Sometimes you see something like this. The market will come, just test the tip of what? Of this blue line, and then it goes up again. So if it doesn't close below, that way, I won't get into trouble. Do we understand? If you look at here, you see that the market tested this region. If you look at here too, you see that the market tested the region, but the price got rejected. The price didn't close below. So it's just to tell you that the uptrend guys, they are still a little bit in control, although they are beginning to lose power, because right here you can see a liquidity grab there. You can also see a liquidity grab here. Okay.
Yeah.
So it's a battle that's happening right here. There's a battle happening right here. Until there's a major winner of the battle, you don't have a clear direction yet, and you can't step into the market. Go ahead, sir. I think you have a question, right?
Second code. Okay. Based on this now, it depends on the time frame you are using. Like now, I think maybe you're using 2.
I was using 4 hours before, but now I'm using 1.
1. So 1 now, we are just beginning to see the weakness of buying power. So there may be a push up before the main break below. So, but when so maybe a push up before the main. Once you break that below, then that's all. The buying power over. Yeah.
Thank you very much, Mr. Festus. Thank you. Okay, so now on 4 hours, we didn't see so many things. We didn't see so many display. But if you zoom in to 1 hour, you see the display. Look at this right now. Okay, you can see that there's a tussle between the red guys right here and the blue guys right here. Look at that. Okay, there is a power tussle between them, and if you look at it very well, you see that there's like a compression going on. There's like a volatility compression going on, because if you look at it, it's like a ranging market already. Let me do this for us. You see that the market has been maintaining this box, okay? Started from here. Let me use black so that we can see it. Started from here, went up, respected this box, came down, respected this box, came up, even went out, but it soon came back in again, and then came back here and respected this box. Okay, now it's about to go up again. Okay, although we can see a change of character here, until this change of character is respected by breaking out of this box, then we are still in a sideways movement until there's a breakout either up or down. Either it goes up like this, breaks out from this box, or breaks down like this. We are still in a sideways. We're still in a sideways trend. Okay. Now let's move on. So what I was saying in essence is, because I zoomed in into 1 hour, I was able to see that, oh, okay, I think I still need to wait. Even though my blue line is just right here, there is something going on from here to here, okay? So until there's a breakdown towards here, or a break up towards here, I don't want to step into the market, because right now the war is very intense. The war is very intense. So let the war cool off first. Let's know who is the winner, and if it's in our direction, we buy. Okay, if it's in our direction, we buy. Now, what I can see, let me further explain this for us. What I can see right here is that the sellers are going to break this region very soon. Okay, they are going to break this region very soon, because they've tested here. They've tested here again, and then the third one is most likely to break down. Now, what happens when you keep punching a wall? Like you want to demolish a wall. When you start hitting your hammer on it, it won't fall immediately. But if you persist, you keep hitting it, before you know, the wall will start cracking. It will start falling. Now, this is what is happening right here. Okay, there's most likely going to be a breakdown very soon. A breakdown very soon. Okay, now let's move on to the next thing. I believe we all understood everything said so far.
Yes, sir.
Before we move on, does anyone have question? Go ahead, please.
No, I was answering to the part that I understand.
Oh, awesome. Thank you, Mr. Eugene. Okay, I think we took a trade here. Let's see if it has hit our level. 5 minutes. Okay, can you see that? This was the cons that we were talking about. If the market never reaches your designated price, the order will not execute and you will miss the trade. Exactly what just happened now. Look at that. The market didn't hit this region yet. It's still going to come there, but not yet. It didn't hit this region yet and then went up. Okay, for a sophisticated trader, what do? Just leave the market, let it go its way. Don't chase it. Don't come and buy at this region now. No. Don't come and buy at this region. It has tested the premium level already. Look at that. This is the premium level. The premium level has been tested already. You don't want to come and enter at the top because, like I told us, anything that goes up in the crypto market is sure to come down. Anything that is down is sure to go up. Now, it's up already. Just wait for it to come back and retest. Maybe not according to your time, because I was expecting that it should come down the previous time, but it didn't come down. Just leave it until it comes down. Don't chase the market. Don't FOMO in. Until it comes down, that's when you should step in, okay? I think this was a wonderful example for the cons. All right, let's move on to the next one. We have stop orders. Okay, for stop orders, a stop order sits as a pending instruction until the market reaches your specified stop price. Okay, once that price is hit, it automatically turns into a market order. And number one we have there is what? Stop loss or sell order. Okay, this is placed below the current price to protect against severe downward moves in a long position. In a long position, let me show us that. In a long position. So this, let's say for instance, let me delete this. Okay, let me not delete this. The market is still coming, I believe. Okay, let me leave it like that. We can see the long wick right here. If we remember, Mr. Moses, Mr. Sheye, when we're talking about candles and we talked about the long wick, it means what? Price rejection. You can see right there. Okay, sellers gaining control. They've pushed the buyers out completely. And the price, okay, can you see the power toss going on now? The buyer stepped in again. The sellers are about to step in again. So look at that. So let's see what happens eventually. So let's look at the example we just talked about now, which is the stop sell order. Now, the market, the indicator created a blue block for us right here, and we know that simply means what? A bullish block. Now, for somebody trading futures, you believe the market is going to go up, okay, to say maybe 5 or 6%. However, you are the type that uses isolated and you want to protect your capital. The ideal thing to do is to set your stop loss just a little bit below the blue block. Okay, look at that. Now, if you look at it, when the market started from here, and then it was a very choppy market. Look at that, very, very rough, choppy one. Okay, the market, okay, let's say, for instance, these are 6% now. If you look at it very closely, it looks as though it was filled, but it's not filled. Look at that. It's not filled, just a little bit more, okay? Look at that tip, just a little bit more. Or let's set it to 7%, so that you can see what I'm saying very well. Now, 7%, it's not filled yet. Now, look at where we started from. The market started from here. Okay, very choppy, looking like it was going to get filled, but it didn't get filled. And then it started coming down again. Now, look at that. Can you see that's very close to the stop loss order? However, the price was just only retesting the bullish block. After retesting, what happened was it went up, changed character, and then boom. The order was completed. The order was completed. Now, what we are saying in essence is stop loss or sell is placed below the current price to protect against severe downward moves in a long position. This is what we just did here. This is a long position, okay? This is a long position. We are buying up. Long simply means what? We are buying up. We bought up. However, for those who are using isolated, the stop loss, which is the sell stop loss, was placed just below the bullish block. Okay, was placed just below the bullish block, so that in case market chooses to do its thing, then when it gets here, the order is initiated and the loss is cut short. Okay, the loss is cut short. Okay, that is what a sell stop loss, or a stop loss, or a sell stop loss is. Okay, just placed below the current price, almost close to it, against severe downward moves in a long position. And buy stop is what is placed above the current price. Buy stop, okay, is placed above the current price, often used to trigger a buy when an asset breaks out of a specific price level. Okay, this is placed above what the current price, often used to trigger a buy when an asset breaks out of a specific price level. Let me give you an example. Now, this market was choppy. One second. This market was choppy first, okay? Yes, right there. It was choppy first. Eventually, it came back to test this order block. Now, since this bullish order block means what, we are going up. But you want to be sure that after this choppiness, I hope we are not going down. I hope it's that we are going up of a truth. Now, to be more clear, so that you don't get tricked by the market, what you want to do is what you want to wait for the market to come and test this break of structure, to break above it, and then most likely maybe create a new order block, like we can see right here, and create a new order block, like we can see just right here. Look at that. So what you want to do is you want to put your blue this thing that I usually use, you want to put it here and wait for the market. After having done its choppiness, choppy, retested the bullish order block, came here, change of character, went up, and then retested. Now, after that retest, for those who are initiating a buy stop, they are going to place above the current price, okay? Often used as a trigger to buy when an asset breaks out. Now, this is a breakout right here. This is a breakout, okay? It broke out and then it retested. Now, on this retest, this is where you are going to place your what? Your what's it called?
Order.
Your order. Thank you. That's where you're going to place your order. Okay? And then it's just to confirm that of a truth, this bullish order block is a strong one and a serious one. And then from there, you go up. Okay? You go up. That is what it simply means. Do we understand? Do we understand?
Yeah.
Okay, that was Mr. Festus. How about other people, other persons? Do we understand?
Yes, please.
Awesome. Mr. Frank, I've not heard your voice today. Oh, Mr. Frank is not in this meeting. Who else have I? Mr. Moses, I've not heard your voice this evening. Do you understand, sir? Mr. Moses.
Yes, I'm there. I'm listening.
Do you get it?
Yeah, this last one, I've not got it.
You've not got it.
Yeah.
Okay, I will explain again. Madam Modupe, do you understand it?
Not very well, sir.
All of them, or which part? Which particular one?
This last one.
Awesome. Mr. Eugene, do you understand it?
I do, sir.
Sir?
I do.
Awesome. Mr. Festus, do you understand everything said?
Very, very well.
Fantastic. Mr.
Good analysis.
Come again, sir?
I say I'm very good in technical analysis.
Fantastic. Mr. Sheye, do you understand it, sir?
Yes, well understood. Thank you so much.
Okay. Very well. Now, for Mr. Moses and Mrs. Modupe, let's quickly touch the buy stop again. Okay. Let me read what we have here again. It says placed above the current price. Now, where is the current price? Let's take it one by one. Previously, okay, let me use my bar replay so that you can understand better. 1 second, let the bar replay load. Awesome. Now, good. Let's place it here. Okay. Now, so the market is presently here. Okay, you can see a green order block here. Okay, this is a what? An order block. It simply means there is liquidity around here that is going to push this price back up upon retest. It is going to what? It's going to push the price back up upon retest. What is a retest? It simply means retest simply means a price goes up like this. Where's my notes? Okay. It simply means a price goes up like this and then comes back to retest a particular area or zone. Okay. Now, as you can see, this is a retest. Once it gets to this retest, what happens is that it bounces back up. Okay. It's coming to retest the support. It's a support area. Okay. Okay. Now that's it. So the first thing we are looking at is what it says placed above a current price. Now, where's the current price right here? Our current price is just here. Can you see that? That's our current price. Now, we are going to place our buy stop right here. Can you see that? Right here on the blue line above. Now, placed above the current price. We have placed our, what's it called now? Our, what's this thing? Please, somebody help me. What's the right language to use?
Buy stop means placing an order above the current price.
No. I'm trying to get something. Oh, I can't even remember now. It just went off my head. Okay, so we placed our
Do you mean, Coach? Do you mean the resistance?
No, not the resistance. I'm trying to say we placed our order here. Order is the right thing. Order is the right thing. Okay, we placed our order just right above the current price. Okay, our order is just sitting on this on this resistance. Now this is a support right here. This is a resistance. So for buy stop, I want the price to break the resistance and retest, and then boom. But that simply means I have a clear understanding that the market is going up. Now, let me use this order block as an example itself. Look at this order block right now. This order block is formed already, okay? From here, we saw the market go up. From this order block right now, we saw the market go up, but of which we know there's going to be a retest. Okay, now look at the current price now is here. It's yet to touch this order block. Okay, now, once the price comes back to test here, we know we are going up. So what I want right now is what? Let my order be filled once we break above our previous resistance. You know the price was resisted here, okay? Let the market be initiated. Let the order be initiated once we break above the resistance level. Because once we break above the resistance level, it simply means we are up for for a more uptrend. For a more uptrend. Now, so I'll place my order just right here. Okay. Now, but my price is below because the instruction says placed above the current price. So we've done that. Now, it is often used to trigger a buy. A buy simply means you are longing, you are going up. Now, it is often used to trigger a buy when an asset breaks out of a specific price level. Now, what I'm waiting for is let this market come and break out of this level. I'm coming. Let this market right now that is here, let it come and break out of this resistance level. I want the market to come and break here. However, this is the current price. So what I'm waiting is for the market to retest this place, then break out. Upon the breakout, let what my order be what be initiated. Do you see that? Now let's watch. I'm going to redesign this now. So this is what I want. I want a retest and then a breakout. Okay, so my order is here. So once there's a breakout, let my order what be initiated. Now let me press play and let us watch. I need to take this off, okay, so that we can watch. All right, let's watch now. All right, let's watch. My network, I think, is not allowing it to play. Hopefully it allows it. Oh, the network is bouncing it. What's happening? This is network. Sorry guys, let's just wait for some seconds. Let's see if it's going to play. It's meant to play actually. It's the network that is not permitting it. Oh goodness, what's happening? Can you just play? Oh. My network just went bad. It won't allow this thing to play. Just keep loading, but won't play. Oh, goodness. Let me just, if I off my network now, I might lose you guys from the group. Maybe we'll just move on because it won't play. Am I still being heard?
Yes, yes, you are being heard.
Let's move on.
Okay, let's just move on. It's complete. We can come back to it. But Mr. Moses, did you understand it already, or you still have? If it's still not clear, let me know. We can talk in the chat room later so that I can explain better. And also, Madam Modupe, do you two understand it now
I
or not yet?
understand now. I understand now, sir.
Good.
Okay, you understand now. Fantastic,
Yes,
fantastic.
yes, sir. Thank you so much.
What we just simply, yes, you're welcome. So what it just simply means is once the market breaks a structure, we want it to like towards upward, towards the uptrend, we want it to buy for us. That's just what it simply means. Okay. It's still the same thing. It's still not going. Still not going through. Okay, it's fine. All right, let's move on. So we have the pros and the cons. The pros, highly effective for what? Risk management. Okay, so it simply means until there is what? They break even, you won't enter that market so that you can be on the safe side. If you just want to get into it, you just want to get into the market, what if the market goes against you? Okay, so you want to be sure that what? The market breaks out. Because if you look at the buy stop right here, there's a phrase there. It says breaks out. Look at that. It says until an asset breaks out of a specific price level. So it is very important. You wait for that breakout, and then when the breakout is there, boom, you follow the trend. Okay. So the process highly effective for risk management and what? Automating exits, so you don't have to monitor the market constantly. So you already see the trend, You already analyzed that, okay, there's going to be a pullback, and after the pullback, there's going to be a break even, and on that break even, let the market buy for me and let it take profit. It's just very, very simple. That's what it means. Okay, and then cons, because it becomes a market order, upon triggering, you may get filled at a worse price than your stop trigger if the market gaps or move extremely fast. I'll break down that. It says because it becomes a market order. Upon the price getting to your level, it becomes a market order, because you are not buying low. You are setting your price above the current price. So it becomes a market order upon triggering. You may get filled out at a worse price than your stop trigger if the market gaps or moves extremely fast. So it simply means if there's volatility, you may get filled. You may get a worse price. That's what it means. If there's volatility, there will be rapid movement, and then there might be a little bit of inconsistency there. So that's just what it means. Once more, I'll just quickly explain it again, so that everyone can be clear. Look at this is my current price right here. The market, I wanted to break this level. Okay, the market started from this level down here, and it's ranging and ranging and ranging and ranging and ranging. Okay, now I want the market to break this level up and then buy for me. Okay, now the market is ranging, it came back to retest. It was resisted at first, but couldn't break here. Now I'm saying once the market is able to come and break here, automatically buy for me here and take profits maybe somewhere around here. That's what it means. So that's why it says you place your order above the price. This is the price. This is where I want a break. So I'll place my price here because this is the price under. Okay, so when there's a break even from this region, okay, buy for me and sell when it goes up. That's just what it means. That's what buy stop means. Okay, I believe we all are clear now. We all are clear now. Okay, let's move on to the next thing. Okay, so we have stop limit orders. Stop limit orders. Similar to a stop order requires you to specify a stop price. However, once the stop price is reached, it becomes a limit order rather than a market order. There's a little bit of variation here. So the previous one we checked, it says once the order is filled, it becomes a market order. But for this one right now, it is saying once it is filled, it becomes a limit order. It is just similar to a stop order, okay? But this is stop limit. This is not stop order. It is similar to a stop order. If you look at the heading there, we have stop orders. If you look at the heading here, we have stop limits. Okay, so a stop limit order requires you to specify a stop price. However, once the stop price is reached, it becomes a limit order. Many times I just for rounded knowledge sake, okay, that's why I'm covering this. I'm covering all of this for us, okay, so that we can just have an idea of what it is. Many times we don't use all these ones, okay. For people who has been with me, I don't use stop loss. Even stop loss, I don't use stop loss. Even isolated, I don't use it. What we use basically is market order and what's it called, limit order. That's all. But just for knowledge sake, that's why we're covering this. So let's go to the use case. It says helpful when you want to cap your losses or catch a breakout, but absolutely want to avoid slippage by setting a threshold on how bad a price you accept. So it is useful for those who want to cap their losses. Okay, since it is a stop limit, they want to cap their losses. They don't want to incur a very huge loss. Okay, so they use this metric to cap their loss or their losses. Okay, and also if they want to catch a breakout, they use it also. And through this means they avoid slippage, and they also they avoid slippage by setting a threshold on how bad a price you accept. All right, let's look at the pros and the cons. The pros: exact price protection. Okay, so it protects you. Okay, you're buying at the exact price. It protects you from extreme volatility. And the cons: if the market keeps pass your limit range entirely after hitting the stop, the order will not be fully filled. I've experienced this before. When there's crazy volatility, especially when you're using the exchange, maybe the price just comes to the range where you want to buy in, but quickly leaves again. You see from the what's it called? From the breakdown in the platform that some of your orders were filled, not all. Okay, some of your orders were filled, not all. I've experienced this before myself. So if the market skips fast, like that's very volatile, it skips fast your limit range entirely after hitting the stop, the order will not be fully filled, leaving you stuck in the trade. Okay, so like I said earlier, we only use market order and limit order, and maybe what's come to us, stop loss, but we don't use all of these other types of orders. If you go to Binance here, you see what I'm saying right here. Where's futures? Okay, I'm coming. Let me go to trade. If you look at this right here, you see what I'm saying right here. Okay, you see that we have lots of types of orders, and I'm not sure any one of us here use above maybe 3 of them, which is what? Limit, market, and stop limits. Okay. Okay, for some people they use trailing stop, but for others we don't really use them. Now, if you look at what we have written here, it says limit, you buy or sell at a specific price or a better price. That was the same thing we explained. The market is simply saying you buy or sell at the best available market price, like right now. Okay, we have the stop limit. It triggers the limit when stop price reached. Okay, stop market it triggers the market stop price reached. We have the trailing stop, and that's what we are about to explain. I just brought up here so we can see that we have all of these things. I know many people are not aware, but we have all of these things. Okay, it's just good we have an idea, even if we don't use them. Okay, all right, let's get back to our slide. Okay, so we have the trailing stop orders. A trailing stop is a dynamic stop. It's a dynamic stop order where the stop price is set as a specific distance, either percentage or fixed amount, away from the what? Current price. As the name implies, it trails. That is what it means. This trailing stop orders simply means, let me give us a visual explanation. Look at, maybe this is the price starting from here. Maybe your take profit is here. Okay. Now, but from here, you already, oh, sorry. Let me take it. Okay. You enter the market from here and your take profit, your TP is here. Okay. But however, you don't just want to leave the market to go. Maybe it gets here, comes back again. You don't want, what you want to do is you want to set in stop. Okay. So that as the market is going up, there's an adjustment to your stop order. Okay. Now, once the market, this is your trailing stop here. Once the market moves here, your trailing stop also comes here. The market goes up again, your trailing stop comes here. The market goes up again, your trailing stop comes here. That's what it simply means. So it trails the price. Okay. Now I'll read it again. It says a trailing stop is a dynamic stop order where the stop price is set to a specific distance away from the current price. So it simply means as the current price is moving, your stop order is also moving close. They are moving at the same distance upward. So that when you're as you're moving up, you're locking in profit. So that when the market wants to reverse like sharply and seriously go down, the trailing stop would protect you from the market taking all of the profits that you've like all of the distance you've covered before. Imagine you've covered this much distance and the market wants to do this. It means you'll be losing. If you're not using a trailing stop, you'll be losing all of this. But if you're using a trailing stop, right, it won't happen because as the market moves from here to here, you just adjusted. Move here. If you want to do this, you take something. Do we understand that? If you understand that, give me a thumbs down. Or if you want me to explain again, give me a thumbs down. If you want me to explain again, give me a thumbs down. If you understand, give me a thumbs up. Awesome. Okay, fantastic. So we can move on then. We can move on. All right, so let's look at the use case. It says it is ideal for locking in profit. That was what I just explained now. Ideal for what? Locking in profits during a favorable trend. So as the market is moving, you're locking in the profits bit by what? By bit. Now, if the market goes up and stop moves, and this, oh sorry, let me take it again. Ideal for locking in profits during a favorable trend. If the market goes up, the stop moves up with it. That was what I explained earlier. Okay. If the market goes down, the stop stays in place. That's the beautiful thing about this. Okay. The market is going up like this. Where's my marker? The market is going up like this. Okay. As it is going up, your stop is also moving along with it at each distance you've set. Now, when the market tries to do this, the stop order stays here. It doesn't move down, so that everything you've locked in before, it remains with you. Do we understand? I believe we do. All right. Now let's look at the pros and the cons. The pros automatically trails the price to maximize gains on winnings. It actually trails the price to maximize gains on winning trades while still cutting losses. So it is there to help you cut your loss. Okay. The little you are able to cover, you own it. You don't lose it back to the market. That's what it means. And the cons can get prematurely triggered by short-term market noise or normal pullbacks. So what it's saying is what in times of spike, it just moves, and then that's not so beautiful. So it can get prematurely triggered by short-term market noise. Okay, maybe just a spike or normal pullback. So that's just the con. Okay, but the thing is that it's a beautiful feature. It helps you lock in profit. It helps you lock in profit. Let me see, how many more slides do we have? Okay, we have just one more, and then I believe we should lastly here is time in force. Okay, validity order, time in force orders or validity orders. It says, does anyone have a question? I think a mic is. Does anyone have a question? Mr. Moses, do you have a question?
No.
Mr. Moses, okay, you can mute yourself, please. All right, so this dictates how long your order remains active in the market before it expires. Okay, this type of order, time in force, okay, is simply what dictates how long your order remains active in the market before it expires. Now we have the day order, we have the good till cancelled, which is GTC, we have the immediate or cancel, which is the IOC, and we have the fill or kill, we have, which is the fork. It's similar to what we saw here just now. If you look at this, we have the OCO, we have the TWAP, we have the scaled order, we have the trail. Okay, we've talked about the trailing stop. Okay, so there are lots of orders. Now let's look at them one by one. The day order, it simply means what? Valid only for the current trading day. If it does not execute by the market close, it is automatically cancelled. So if you if you set this order and throughout the day it does not get executed, it will cancel automatically. That is what time in force is for day order. Okay, and the GTC, which is good till cancelled, this order remains active on the exchange until you manually cancel it. It is until you manually cancel it or it hits a trigger. I think this is the type of order they use in this breakout account. So the order remains good until it's cancelled. When you search, let it load so that I can show us. The network is so messy. Okay, so when you set an order, right, this is your position. Let me show us. This is the position, and this is the orders. So when you set orders, it comes to the order area, and then it will tell you good until it is cancelled. Okay, they use GTC over here, but I don't have any open orders now. So it will tell you good till cancel. So it's either you cancel it manually or it triggers. So when it triggers, it will erase automatically. But if the price doesn't get to your region or your area where you want to step into the market, it will just remain there until you cancel it manually. Okay. We also have the immediate or cancel, IOC. Okay. It says this order must be filled immediately, either entirely or partially. any unfilled portion is immediately cancelled. So this type of order, once you set it, two things are involved. It is either it gets immediately filled or it gets immediately cancelled. I believe that is succinct. All right, let's move on to the next one. This is called fill or kill, or abbreviated as what? FOC. Now, it says this order must be filled completely and immediately, or it is completely cancelled. No partial fills. Now, for immediate or cancel, they can be what? Partial fills. Because if you look at it very well, the immediate or kill says the order must be filled immediately, either entirely or partially. So that's a clause you want to what? Pay attention to. And for the fill or kill, it's different. It says the order must be filled completely and immediately. There's nothing like partially here. Or it is what? Completely cancelled. Or it is completely cancelled. So these are various types of orders that exist on platforms, on exchanges, on brokers sites, okay? But we don't use many of them. Maybe for us, there might be people using them, okay? So this is just an example right here. The 9 types of trading order that we have, which we've spoken about so far: the market order, the limit order, the stop loss types of orders, the stop loss market order, the stop loss limit order, aftermarket order, AMO. I think we didn't even talk about this one. You see another one there, AMO. Let me show you. This is it, AMO. I'm not even sure we talked about that one, okay? Different names for different types of orders. Just stick to the one that you're using. You don't need to cram all of these things, actually. So we have the bracket order. We didn't talk about this also. It's also another type of order. We have the cover order. We didn't talk about this also. We have based on time or duration, okay? This is the last one we talked about, okay? That's the last one we talked about. Okay, let's look at what we have next. Okay, that was time in force. It's named time in force here, but right here it's called based on time duration. Based on time duration. All right. I believe we all understood everything said so far. So the question we have here is, which assets are we to trade? Okay. Which assets are we to trade? The assets we are to trade, what we have there is the best cryptocurrency asset to trade generally features high market capitalization, deep liquidity, and established use cases. And the simple way to go about them is what? The number 1 to 100 tokens on CMC. They are best in this regard. I can attest to that. Okay, number 1 to 100, they are what? They are the best in this case when talking about which assets are we to trade. You don't want to get into meme coin, shit coins. I tell you, in a day they can crash up to 300%, 400%, 500%, 1000%. I think I showed us some tokens that crashed the last session, and we saw the great amount, the great percentage in which they fell. We don't want to get into there and then destroy our capital. Okay, so that's it for today. Let's stop here for today. We'll take it from here next class. I believe we've all been able to cap 1 or 2 things. If you've been able to 1 or 2, just give a thumbs up. Let's know you've 1 or 2 things. Let's know you've capped 1 or 2 things. Awesome. I think Mr. Olumide was able to join us today. I think this is his first time joining us. I'm sure he has been in our meeting before. Mr. Olumide, good to have you, sir.
Yes. Yeah, good evening, sir.
You're welcome, sir. Do you want to give us a shout out? Oh, it's the second time. Oh, great, great.
Second time.
Great. Do you want to tell us 1 or 2 things that you learned from this class?
Well, I've learned the orders. I've learned the stop loss order.
Awesome.
And different orders. But I need to know what's that CMC that you mentioned, the first 100 CMC.
Okay, the CMC is just an abbreviation for coin market cap. Okay, and this is where tokens are ranked globally. Coin market cap is where tokens are ranked globally. You can see it on my screen here. Coin market cap. You can just go to your Play Store. For every one of us here, we are meant to have this tool on our phones, okay? This is a very important tool you want to have. Let me just quickly take us through CoinMarketCap so that we can know how to go about it. If you look at we have ranking market cap, and you can also see above it rank. The rank is what's top 100. Okay. We also have 24 hours trading volume. Are the things that I think are mostly important. However, when you click on each particular token, you get more insight into the token is made up of, what it's what project it is into, and everything that has to do with the token. So take us through the first two that I mentioned in your own free. Take time to explore CoinMarketCap. Is a very useful tool. Also, you can see the fear and the greed and the fear index here. It's a very important tool for us. You can also see the altcoin index. You can see market cap, the total crypto market cap here, and you can also see CMC token here. Okay, it's a very wonderful tool. I tell you, you should explore it. Now, the fear and greed index. Let's quickly start from there. The fear and greed index. Okay, what does this mean? It simply means the entire sentiment of the markets right now. The entire what sentiment of the market. Okay, look at it. The fear and greed is 36%. Okay, which simply means people are fearful of the markets. Very soon, the markets, the fear and greed index will from here, okay, come even to this red zone, where it will become extreme fear. If you are checking it from time to time, you see that this fear will later change to extreme fear. Okay, and when this knob right here, when it moves down here, it's changed to extreme fear. But it can, in the same way, move up here, and then what you have here will change, and it can move up here, what you have here will change. It can move up here, so what you have here will change. Okay, now let's quickly look at what it will change to when it changes. Now, am I being heard now?
Yes, you are back. Yes.
Okay. The network kicked me out. Okay, so I was explaining the. What's happening? Yeah, good. So I was explaining the coin market cap to us in a summarized way. Okay, so let me just quickly touch it again. Can you see my screen now, Mr. Shaya? Please confirm you can see my screen, sir.
Yes, please.
All right, awesome. So I was talking about the fear and greed index. I believe we heard a lot about the fear and greed index already. So what I want us to do now, let's look at what it becomes when the moves back and forth. So we're at 6% now, and that is just fear. But if you look down here, you see that I mean right here. Okay. Oh, thank you. I've seen. Can you take it off? Okay, good. Now, if you look down that side that I have my pen over, you see we have extreme fear, we have fear, we have neutral, we have greed, we have extreme greed. Okay. Now we are presently at fear. I think that's the orange color. Okay. When it moves into the red zone, it will become extreme fear. When it moves to the yellow, it will become neutral. And when it moves to the first green, it becomes greed. And when it moves to the what? Very deep, the other green, it becomes what? Extreme greed. Okay. Now that's it about fear and greed index. So let's move on to the next one. So when it comes here, it becomes extreme fear. When it comes here, it is fear. When it comes here, it is neutral. When it comes here, it is greed. When it comes here, what? Extreme greed. Do we understand? Okay, now let's move on to the next thing. We have the total market cap. Okay, the total market cap right now sits at $2.1 trillion. The total market cap of cryptocurrency sits at what? $2.1 trillion. Okay, the next thing you might want to check out for is okay, the top coins, like I said. So if you click here, you can alternate things. Okay, from top 100, you can see. Let me exit this. You can see top 200. If you look below now, you see it's showing you options. Which one do you want? Do you want top 100, or you want top 200, or you want top 500, or you want all the coins? Okay, it is depending on which one you want. Do you want all the coins? Do you want top 100? Do you want top 200? Do you want top 500? Do you want? So this is what's top 100. Okay, now let's just switch quickly so that we can see things really quick. So I'm going to switch from top 100 to top 100. All right. Okay. Can you see that now? We now have top 100. Oh, it's still okay. Yeah, it's top 200. It's loading. Look at that. Can you see? That's top 200. The first top 200 according to what? To their ranks. Starting from BTC to ETH to Theta to BNB to that's they are listed up all the way to 200. Okay, and then we have the top 500 also, and then afterwards we have what? All the coins. Okay, so this is where you get proper grading of tokens. Okay, proper grading of tokens, which is very important. With this tool right now on your phone, you won't fall victim of any token. That is not good. So like I said earlier, we want to stay between 1 to 100. So when you're in 1 to 100, what you can do is you just come to the token. Let's say let's come to Link or ADA or XLM. You see some informations there. You see the total market cap of Link. The total market cap is what? Sorry. Total market cap is, look at it here, $4 billion. That is a very good liquid token. You are sure that they can't be any story that touches they have. You trade with peace of mind. Okay. If you look at the volume also, you see it has a good 24 hours volume. It is up 56% in the last 24 hours. Can you see that? That's a good one. Okay. $356.4 million in the last 24 hours. That's a good one. Okay. You can also check out, let me take this off. You can also check out their community. Okay, let's look at another token. Let's look at Solana. Look at Solana here. What's the total market cap of Solana? $43.6 billion. That's a lot. If you look at the volume, we have $1.3 billion. 24 hours trading volume. That's crazy. That's crazy. Okay, you can also come to the community and check out the community. Okay, look at their community. People sharing things, insights, thoughts about what they think about this token. 83% are bullish. Look at it up here. 83% of them are bullish. Okay, and just 17% are bearish. Okay, I also am bullish about what Solana. Okay, Solana is to the moon because it almost close to the bottom already. Okay, so I'm also bullish. You can also give your votes if you think it's bullish or bearish. Okay, you can also see its market right here. Okay, you can also see the news about Solana. You can also see the yield and so on and so forth. So you can, it's just amazing. Also, if you look up here, you can press this star, okay, to add it to your favorites. Hold on. Look at this star right here. You can also click it to add it to your to your favorites. Okay. Let's move on. Now, one thing about the Fear and Greed Index that I forgot to mention to us is I want to ask a question from the, am I still being heard, please? Mr. Shea, am I still being heard?
Yes.
Okay, fantastic. Okay, now, from the last presentation about the next year plan that we have, who can tell me, according to the Fear and Greed Index, when are we supposed to enter? Are we supposed to enter here? Are we supposed to enter here or here or here or here? Is it the red, very red, or the orange, or the yellow, or the green, or the deep green? Where are we supposed to enter from the Fear and Greed Index? Who wants to build the cards?
I want to try.
All right, go ahead, Mr. Olumide.
Okay, we should enter from the red.
God bless you, sir. Absolutely correct. Because like I told us, Warren Buffett will always say, when everybody are fearful, you be greedy. When everybody are greedy, you be fearful. So that's just what you're going to employ. When you merely looking at the fear and greed index, that's just what you're going to employ. When the knob comes here, when this knob comes to this red zone here, it means everybody are becoming extremely fearful. And that is where you should have confidence. That's when smart money guys, that's when they're moving, because the market is going to be very cheap. And where are we meant to get out? Mr. Sheye, this question is for you, sir. Are we meant to get out here or here?
I didn't get that, sir. Sorry, don't mind me. I'm actually on the road. Okay,
Oh,
but
okay,
let's
see.
let me see.
Okay, I said, where, if we enter from here, from the red zone, where are we meant to get out? Are we meant to get out from the light green or from the deep green?
We are meant to get out from the light green, but depends.
Thank you, sir. Absolutely correct.
Okay.
No, you're correct. You hit it on the nail on the head already. You hit the nail on the head already. Well done. So this region is where we are meant to get out, because this region, you know, this is the peak. And what happens is that the market starts tanking. Okay. Now, Mr. Moses, this next question is for you. Who are the guys that enter from this yellow region?
I've forgotten the term that, but I know they are the people that feared to enter from the red, so they are, because they were waiting that the market would still come down, so they entered here, and I have forgotten the term.
Okay. You can call the person. You can call sophisticated traders. You can call them newbies. You can also liken it to Mr. Newton. Okay, you know, Mr. Newton saw the market at the red zone, he didn't buy. He saw at the orange zone, he didn't buy. He saw it at yellow zone, then he came in with big bag, and then he was hoping that the market is going to go to the moon, but the market started tanking before he could say jack. Okay. So thank you, everybody. It means we could still recollect the analysis we did the last time. Okay, let's move on to other things we can see from CoinMarketCap. So I encourage us all to download CoinMarketCap from the Play Store or from Google Store, and then let's have this wonderful tool in our list of tools. Okay, so you could also set a watch list. Once you press star, those tokens you start, they will come to your watch list. Okay, also you could, what else could you do? Now, good. I'm on top 100 right now, but if I click this market cap right here, something is going to change. Okay, and if I also click 24 hours, something is going to change. Now, let's see what's going. Let's load. It's loading. Okay, good. What do you change, Madam? What do you think's changed?
The coins, they are in descending order. It started from the 100 downward.
You are very, very correct now. God bless you.
The ranking is now from 100 downward.
Downwards. Thank you very much. That's absolutely correct. That's absolutely correct. So it simply means we can flip from 1 to 100, and we can also flip from 100 to 1. Okay. Thank you, ma. Thank you, ma. All right. The next question that I have is now let me press the 24 hours volume and let's see what is going to change. Then I'll call somebody. Oh, okay. I think this one we're going to select. Okay, good. You can select between 1 hour and you see the trading volume, or 24 hours and you see the trading volume, or you select 7 days and you see the trading volume, and then you could select 30 days, 60 days, or 90 days also. Okay. Then we also have more features on CoinMarketCap. I would encourage you to right here we can see here. I don't know if they share signals also. I've not taken the time to check it out. We also have CMC AI. Okay, we also have portfolio, and we also have community generally. All right, so let's get this up and let's explore. All right, I believe it's been a wonderful meeting today. We've gone past 1 hour 30 minutes already, and I appreciate everyone that waited this far. It simply means you cherish knowledge, and I can tell you, you're waiting. It can't be in vain. Never. You are growing by the minute, by the hour, by the day. You are growing, and it can only get better. I can only expect to see everyone here at this moment at the top if we continue this way. Okay. Okay. Well done to us all. Does anyone have a question before we call it a day?
Yeah, sir.
Go ahead, sir.
Yeah, I just wanted to find out, some of us that just newly joined the group, if you have thought the use of SMC indicator, a group, and then the support and resistance. I don't know, even though I have a little of knowledge, but I really wanted to have your teaching on both on those two subjects. I don't know if you have taught them already.
Okay, sir. We have touched briefly support and resistance. And from the brief touch, everybody even already understands support and resistance. Okay. However, we just touched it in passing. We haven't touched SMC indicator yet. The reason why we haven't touched it is if we start from the top, we are going nowhere, we are coming down. That was why I took it upon myself to start from the bottom for everyone here, because we have some of us are really new. Like Mr. Moses is really new. So if I just continue with others that have been in the game for a while, we'll be talking over his head. So to avoid that, we took it from the basics. That's why if you look at the videos that I upload on YouTube, I usually name it ABC of cryptocurrency, or the basics. Okay. We haven't gotten to SMC. We are getting there very soon. in some sessions to come, we'll get there. Thank you, sir. In some sessions to come, so yeah, and I want to just send not the class you want to miss, because by the time your head, fire will be coming out. You will be the newest and the latest hot guy in this business, and I really encourage us to really stay locked. Knowledge is power. Okay, knowledge is really power. For anyone here, if you gather all of this knowledge, I tell you, get to anywhere in the world. So long you have your smartphone, you are making money for your room. So let's get knowledge, and I believe it's going to get better. So we're going to touch SMC trading indicator very soon, but we've touched briefly what's it called now, support and resistance. However, we're still going to touch it again. All right. Thank you for that question, Mr. Eugene. Anyone has any question again before we draw the curtain for the day? Okay, I want to believe that's all for today. That's all for today. Okay, awesome. Good to have us all once again. The video will be out very soon. Let's take it again for one video or the other, or you just need to watch it again so that you can be much more grounded. I encourage us to do this, okay? I encourage us to do this. All right, everybody. Do have a blessed evening. Bye to us all.
All right, sir. Thank you so much for your time. We appreciate it.
Thank you.